In today's video, we'd like to explore the early impact of the Bank of England's first interest rate cut. As we all know, the Bank of England has started its interest rate cutting cycle, and we saw the Bank of England reduce interest rates by 0.25%, taking rates now down to 5%. And just to build out the context of how we've arrived here, we know that during 2021 and 2022, we saw a higher level of inflation than what we had seen pre-COVID. And to combat this, the Bank of England have increased interest rates. So their first interest rate hike of the cycle came in December of 2021, and that lasted through until August of 2023. And over that period, we saw interest rates move from quite accommodative levels of 0.1% through to quite restrictive levels of 5.25%. But what the Bank of England also did was hold rates at that restrictive level all the way through until July of 2024. And over that period, we know that inflation in the UK has moved down closer towards target. So that's what's given the bank confidence that it can reduce its interest rate. But markets also believe that that path is sustainable. So come year end of 2024, the market believes that we could see a further 1 to 2 interest rate cuts. So that would leave rates at year end somewhere between 4.75 and 4.5% within the UK. But also importantly for markets, they believe that that path is sustainable through into 2025, meaning that at year end of 2025, they believe that interest rates will be somewhere between 3.75 and 3.5%. So that would be a further 1.25 to 1.5% cut in interest rates come year end of 2025. Now, we know that interest rates have a significant influence on mortgage rates that are charged to consumers. So as we see Bank of England interest rate move up and down, that also then feeds through into mortgage prices. And as we know, and as we've just discussed, the path of interest rates is predicted to be lower. That's starting to feed through into lower mortgage prices. And what we're really starting to see now is comments from people like Rightmove, where we're seeing demand for housing start to pick up. So they've reported from August last year through to August this year, a 19% increase in the interest in buyers, mainly fueled by those lower mortgage rates coming through. So starting to see improved sentiment amongst buyers. So they commented that the first interest rate cut has really improved sentiment within the market. Now, it remains to be seen whether we see those further interest rates come through, whether that will spur on further interest and demand within housing. But we know that if those interested in housing actually complete with purchases, that should likely increase housing prices within the UK. And we also know that historically, when interest rates move lower, that's typically supportive for UK property prices. So thank you for watching today's video, and we'll catch you in tomorrow's episode.